Hello guys, I'm Paris, the options guy, and welcome to the No BS Trading Podcast. This is episode number 12 of the podcast, and welcome back. And this week, I'll talk about how we saw a flash crash in the global markets, including the US markets, and where the VIX also touched its highest level since the crash of 2020. So, we're going to talk about that first of all. Then, we are also going to talk about what happened in the RBI interest rate decision that happened this week. And then, I'm also going to talk about a few data points which are going to be very important for the next week and which are going to be very important to determine where the market is going to go in the coming few months and how when the US Fed will cut interest rates. So definitely watch till the end, because I'm also going to talk about how our markets can move on a technical basis and the one IPO that is going to come in our markets, and should you apply to it should you apply to it or not. But yes, without any further delay, let's just start with the episode. So on Monday, we saw a very massive sell-off in the global markets. First of all, with Nikkei 225, which is Japan's index, the Japan stock markets, the major index, it was down 12% in a single day. That is an insane amount of sell-off that we saw in the Japan markets. And do you know what was the funny thing? It was up 10% the next day. And that was the sort of volatility that we saw in the Japan's market. But even the US markets, if you see, were down heavily, right? Trillions of dollars of market capitalization being wiped out in a single day. And the only reason was the JPY carry trade. So I'm going to explain to you in very simple terms and in a pretty quick manner so that you guys can understand what exactly it is. Now, if we see the Bank of Japan, it lends you yen, or you can borrow yen from Bank of Japan at very low interest rate, at zero interest rate, right? You could have borrowed, at 0% interest rate just a little while back, but now it is at 0.25% interest rate, right? But still it is pretty low, right? The interest rate is pretty low. So let's say I am a trader. So what do I decide is that let me borrow this yen from the Bank of Japan, exchange it for any other currency, let's say the US dollar, and invest it in other high yielding US dollar denominated assets, like you can say the US government bonds, right, which are giving me 5%, right? And so this is known as the JPY, and this is known as a carry trade, and this example that I gave you is known as the JPY carry trade. And what this means is that basically I borrow in a low interest rate currency and I then invest in high yielding assets. Okay, like you can say government bonds, or I can also invest in stocks and stuff. So what happened, and what is the problem in this sort of carry trade, is that if let's say the JPY starts appreciating, it will be a problem for me, because I've exchanged my Japanese yen for US dollars, right? So that means now when I will go back again to exchange my US dollars for Japanese yen, and let's say the Japanese yen appreciated by that time, I'll need to now pay more US dollars to get the same amount of Japanese yen, right? So that was the major problem, and that is why the sell-off that you saw was because of the JPY carry trade unwinding. That means people were closing their JPY carry trades. Why? Because of the massive appreciation that we saw in the US dollar to Japanese yen currency pair, right? Where one US dollar was going for 160 Japanese yen, just a little while back, and then Japanese yen just took, started appreciating massively and went all the way down to 142. Why did this happen? Because the Bank of Japan did massive interventions in the forex market by dumping the US dollars, because of which the Japanese yen started appreciating very much. And so this was a small sort of, you can say, explanation, and a simple explanation of what exactly happened in the market and why did we see such a big fall in the market, right? And one fact that I told you is that US VIX, right, the US volatility index touched a high of 65.7 on Monday, right? And this was pre-market, so before even the market opened. And so if you see, it had made a low of 16, just 16 two trading sessions before, right? And then it went from 16 all the way up to 65.7, right? And you have to understand how big of a jump is this, because when the markets crashed 40-50% in 2020 in the COVID crash, even then the US VIX made a high of only 85, right? So you have to understand how big of a jump that was in the US VIX on Monday, right? And so my explanation, or what I can think is happening over here, is that this is not because there was extreme fear. I think this was because someone was deep into problems, because of which they had to cut their trades in US VIX in a hurry, right? And I think some big institution is in a bit of a trouble over here now. That is my assumption. I think because someone was in a hurry to cut their trades, because of which US VIX continue to move, because volatility is like a spring. And when you can also trade US VIX in the US markets, right? And a lot of people try to short VIX, right? Maybe shorted by options, by the way of options, maybe long term options or whatever, right? So I think someone was in a big problem and someone wanted to cut their positions very fast, because of which I think US VIX saw such a big up move, right? Because even, let's say Nasdaq was down 3% for the day, right? In pre-market or whatever. But you have to understand that even then it is not as big of a fall as we saw in, let's say the 2020 crash. So the high that US VIX made of 65.7, I think was only because of some big institution wanting to cut their positions very fast in a hurry, right? Maybe because, I don't know, there could be multiple reasons, and we'll talk about that once we have more information on this matter, if any sort of information comes. And one more thing is that from that high of 65.7, US VIX is now back at 20 again. So that is the thing that is telling me that I think this was not because people started fearing all of a sudden, right? It wasn't a very big spike in the fear. I think the only problem was that some big institution was in a bit of a trouble, because of which they had to cut their positions in a very, very big hurry. Maybe some carry trader who had borrowed Japanese yen to again try to short VIX or anything take short volatility trades, they were in a big problem, because of which they had to cut their positions. But yes, if I do get any sort of updates, and if I'm right, if I'm wrong, anything, if I do get any sort of updates, I will let you guys know on the podcast, right? And let's talk about after that on Thursday, where we had the RBI meet and the RBI interest rate decision. I'm really sorry, first of all, for not covering it. I really, overlooked this data point or this event that was coming up. But yes, I'll make sure that something like this does not happen in the future. But yes, RBI kept interest rates unchanged, and they also kept their stance same. So nothing really big that came out of the meeting, really. Only thing that they did was slightly reduce the GDP forecast from 7.3% to 7.1%. Again, not a very, very big change, right? So again, very, like sort of a non-event itself, you can say, where nothing really big happened in the markets, right? So that is all for this week, what happened this week. Now let's move on to what is going to happen in the next week, because there are a few data points which are going to be important that you need to keep in mind for the next week. Now, talking about what is going to happen next week, first of all, we have the PPI data on Tuesday, which is Producer Price Index. And this is the US PPI data. And month over month, it is expected that PPI will come 0.1% higher, right? Now, the last time, if you see, PPI wasn't so good, right? The data wasn't so good. And core PPI on the other hand, also, if you remember going back a few episodes, I said that core PPI is not coming down. And that is one of the major things that you need to look out for. And core PPI on a YOY basis is still at 3%, the previous reading. So keep in mind, this needs to come down, Producer Price Index, because if this starts to come down, that is when CPI will also start to cool off, and like CPI will also show some signs of even more cooling off, right? So this is one of the things that will affect the market. Definitely keep in mind, because the major fear in the market right now, as you would have seen in the last episode of the podcast, I said that it is the recession fear, right? So what you need to keep in mind first of all is that how is the CPI coming? Is CPI coming down, right? If the CPI is coming down, that is a good thing, but alongside is the other data, that like retail sales, right, or any sort of other consumption data, on any sort of sales data that is coming in the market, which is telling us how strong the economy is it coming higher? Because if that is the case, only then it looks like the fear in the market for a recession that is going to come will go less. But in my opinion, as I said, that US markets is pretty much poised for a recession in my opinion, and we very well might even be in a recession. Some indicators might not tell us that, but still I feel like we might really be in a recession, right? But still keep in mind the PPI data, and then after that on Wednesday we have the CPI data, the consumer price index data, which is the most important, right? So on a YOY basis, it is expected that CPI will come at 2.9%, right? Previously it was at 3%, and then on a month over month basis, it is expected to come 0.2% higher than the previous month. Now if you see, last time the CPI data was pretty good, right? It showed real signs of slowing down. CPI, if you remember last time, after I think 42 months, the CPI for the first time came in negative on a month over month basis. So definitely keep in mind again that if this starts to come down again in negative, or any sort of again cooling off we see in CPI, that will be a very good thing for the markets, and you might even see a good rally that can come in the markets. So that is another thing. And then after that, on a core CPI, one of the again important things that I said here, that core CPI is not coming down. So as similar to core PPI also. So core CPI on a month over month basis is expected to come at 0.2%. So keep in mind these numbers also, because they will also affect our markets. And one more thing is that try not to take short you can say overnight positions on Wednesday, because on Thursday our markets are closed on the account of Independence Day. So happy Independence Day to all of you guys, all of you whoever celebrates, to all of my Indian guys. So happy Independence Day. But on Thursday also we have the US retail sales data. So you have to look all of these data points in conjunction, right? Because then they will give a more clearer picture of what is happening in the economy. So US retail sales is expected to come out at 0.3%. Last time if you see, US retail sales didn't grow at all, came at 0.0%, right, on a month over month basis. So what we need, a good thing for the market will be if the US retail sales come out higher than expected and CPI comes out lower than expected. However, this is a bit of a hard thing to do for the markets. But yes, if US retail sales also dip very much and you see a very good negative number, then chances are market might again continue to see a sell-off. Why am I saying so? Is that recession fears will strike again in the market, which will not be great for the markets. So these are some of the major events that you need to look out for in the next week. Now let's move on to what are the IPOs that are going to come in our markets next week. Now for the next week, we have two IPOs. However, for the one IPO, that is Orient Technologies, we do not really have a lot of information in the market as of now. But we are going to talk about the other IPO, that is the Saraswati Saree Depot Limited IPO, right? And this is a 160 crore rupees IPO, out of which only 140 crores, 104 crores will go into the company, and other 56 crores will go to the promoters of the company who are selling their shares, right? So the IPO will be open on August 12th from August 12th to August 14th. And again, from the listing gains perspective, let's first talk about it. Should you apply in this IPO if you want listing gains? Now as of now, if you see, the gray market premium is indicating a listing gain of 22%. So as of now, it is not recommended. However, keep a close eye on how the listing gain is moving, and if on how the gray market premium is moving. And if the gray market premium starts to come above 40%, then you guys if it comes at 40% or above it, then you guys can go ahead and apply in this IPO. from a listing gains perspective, if you want listing gains, but let's say you want to invest in this company, then what you should keep in mind, right? So for that, let's first look at what this company does. So this company is a wholesale seller of saris, okay, but it has now started to diversify into other things also, such as kurti, dress material, lehengas and all those stuff. So but still keep in mind that 90% of the company's revenue comes from saris, right? So first of all, again, as I said, that this is a wholesale company, so that means their margins are not that great. Their PAT margin is at 4.8%. So even from a wholesale company perspective, I think they should have a bit higher margin for PAT. But let's see, again, this is my analysis on how I think, but still, they should have at least 6 to 7% or 6% or more of PAT margin, even if you're doing a wholesale business, right? So and that is what my standard is. However, if you see, now let's talk about how the revenues and profit has grown. If you see, revenues in FY22 were 550 crores and they've gradually come up till 612 crores. So not a great rise in revenue. And but in profit after tax, if you see, profit after tax has gone from 12 crores in FY22 to 29 crores in FY24. So good rise in the profit after tax. However, if you see, the company is not growing that fast, and it is sort of obvious, right? Because saris nowadays, it's not like they're going out of trend, they're going out of fashion, but it's people are not buying them as much as they used to, like 10 to 15 years ago, right? So you have to understand that this company is not a very high growth company, right? And there are again many other things that are sort of concerning about the company, is that they only have two stores. One is the headquarters in Kolhapur and one is a store in Ulhasnagar where I live, right? So this is sort of a bit of a too concentrated thing, right? Because if even one of those stores get closed, the impact will could be pretty high on their revenues, right? But still, again, this is something that we need to keep in mind. But let's look at other things which are sort of a bit more, you can say, important, and that is, if you see, uh, that profit after tax is definitely growing, right? It went from 12 crores to 29 crores. However, I think this can also get affected in the near future if the competition rises. If there is another competitor that comes into the market, PAT margins can get even more compressed, because of which profit after tax can definitely even still come down. And if you see, the company has a debt of 43 crores, but one thing that you'll see is that they're not taking the money, right, to repay their debt, right? So this is not very concerning as of now, because 43 crores of debt is not very high as of now, okay? But still, I would have preferred that if the company would have sort of taken them that money and repaid their debt at least a little bit. But they are using it to fund the working capital requirements of the company, and it is sort of understandable, because this business does require a bit more working capital than other businesses, right? And then one thing that you need to give to the company or to the IPO is that the IPO is not very expensively priced. The IPO is sort of a fairly priced IPO. So what I would like to say over here is that if you want to invest in this company, keep in mind that this will not be a very, very high growth company. You might see a bit of a high growth right now, but yes, definitely in the future. If you want a stable company, then definitely you can go for it. If you want some sort of a, you can say, exposure to the whole sari market of India, right, then you can definitely think about applying in this IPO. However, if you want a high growth company, please do not apply for this IPO. Now let's move on to the market analysis for next week. So yeah, if you see over here, the market analysis for next week. First, let's talk about this week. If you see, Bank Nifty moving down, making a red candle. However, if you see, there has been good buying from lower levels also. And same thing for Nifty also. If you see over here, Nifty went down, saw a good buying, and now has closed just down 1.4%. But still, markets closing down for the week because they opened with a very big gap down on Monday. So what can we do for next week? Now, one thing you need to keep in mind is that whenever this price is looking good to the buyers, they will try to bring the market up very fast from here. They will not wait for the markets. If the market is continuing to wait over here, that means the price is still not desirable for the buyers to enter into the market. Okay, so that is why if the market has to move up, what we need is a very strong closing, right? For bank nifty it can be above 51,000 or even at least 50,800, but with a strong candle like this, right? If we get a strong closing like this, then we can say that yes, the market can continue to recover or at least not continue to move down from here. However, if we see a very strong selling also, then the markets can move down very fast from here. Why am I saying so? Is because of this fake breakout that the market will make, right? Market went market came down from here, consolidated, made this sort of a triangle pattern, and now if the market again comes down very fast from here, then chances are that market can also very fast move down from here and make a new low easily, right? Easily go till 49,000 first of all, and then even at lower levels till 48,200 also. So what we need to look out for is what happens on Monday, right? Or on Tuesday, because mostly if the selling has to come, it will come very fast, right? Mostly on Monday itself, if the selling has to come, you will see market moving down very fast from here. But if the buying has to come, we can give a day or two more, but that's about it. Buying also should be coming very fast from here. Okay, so on Monday, if you are seeing that market has opened flat or opened with a little bit of gap up, whatever, any sort of a, you can say a fast sell off that you're seeing in the market, keep in mind, right? As soon as the market comes below today's low and starts sustaining, starts to make negative price action, that is your chance. Or even in the market comes below this trend line, right, and starts to make negative price action, you can go ahead and go aggressively short over here. Why am I saying so? Is because market will then give you a fake breakout over here, and whenever there is a fake breakout in the market always tends to move very fast in the other direction. So chances are you will see these lower levels coming very fast from here. 49,000, 48,200 also, but 49,000 will come very fast if the market gives a fake breakout over here, right? If the market has to move up, as I said, that if you want to buy in the market, wait for the market to give you a very strong closing for the one day, and then go ahead and take a buying position on the upside. Another thing you need to keep in mind is the US markets. If you see, now I'm going to give you a simple analysis of the US markets also, because we have the chart over here. If you see, US markets has seen very good buying from lower levels. However, I want you to still keep in mind that this is just a pullback. Okay, if the market has to make an uptrend over here, what the market will need to do is something like this over here. Go up over here, take a little bit of pullback, and then start to move up, right? So market will need to do some sort of a momentum like this. Only then can we confirm that a low has been made, and then maybe market might start to move up or at least consolidate over here, right? So talking about S&P 500 over here, okay, if we see, same thing, buying from lower levels. Dow Jones, same thing, buying from lower levels. But one thing that you'll see in Dow Jones is that the buying is not very sharp over here. So Dow Jones can still continue to come down from over here also. Please do not think that the bottom has been made in US markets or whatever. Markets can still continue to move down from here. Okay, so for bank nifty, as I said, I hope you guys had a very clear thing about what to do. For nifty, today's low is going to be extremely important. Why? Because same thing in nifty also. If you see, nifty will give you a fake breakout below today's low. So if we start sustaining below today's low, then you guys can go ahead and take a short position in nifty also, and this time you can keep your first target at 24,000. However, if I think 24,000 breaks, then chances are 24,000, 23,600 also will not be very far away. So all depends on what happens in the first half of the week that is going to come, and then we can make a very strong, you can say, and then we can think about taking a very trending think about a very trending move coming in the market, right? So yes, do follow me on my YouTube channel, where I give a daily analysis of how the market is moving, so that you guys can stay up to date about what is happening with what is happening in the market on a technical basis. So yeah guys, that was it for this week, and thank you very much for watching till the end, and I hope you guys liked this episode, and I hope you guys learned something new from this episode. But do let me know in the comment section, what do you guys think, what do you guys want changed in the podcast, right? And I'll definitely make sure that I make those changes in the coming few episodes. But yeah, that was it for today, and thank you very much for watching till the end. I'll see you guys in another week in another episode. Bye bye.